All right, everybody, back again. Back into inventory, my favorite topic this week. So we're going to talk about negative inventory this week. Negative inventory. A couple things about well, we'll get into it in just a second. So first of all, I'm Marjorie. I'm the CEO of Fourlane. I love doing these trainings every week. Thanks for joining us. Please make sure to tell your friends if there's anybody internally who needs to be part of this, or if you're in any networking groups or anything like that. My passion is to spread knowledge around QuickBooks and make sure people know that they can stay inside of QuickBooks and they don't have to go to these big outside systems. So if I go too fast today, you can go back and watch this video again on YouTube. There are a lot of steps that we're going to be going through today, and hopefully I won't forget them all, or I might backtrack a little bit on some of them. Some of them I intentionally built in some troubleshooting, so you'll see some of that. But you can always go watch our videos on our YouTube channel. We also have a Facebook group where there are other QuickBooks Enterprise users, so we want to get the word out about that as well. As always, just a reminder, if you do not want to have to call QuickBooks support, we can be your support arm. So we do have on-demand support here at Fourlane. So let us know if you need help with that. It is my dream for all QuickBooks Enterprise users to never have to call into support ever again one day, because I know it's painful. All right, let's talk about negative inventory. So a couple things. I'm just going to leave this slide deck up for just a second, talk about what we're going to go through. So what does negative inventory do? This is awareness. QuickBooks is not the only system that has to deal with negative inventory calculations. All systems deal with it. Some systems do not allow inventory to go negative. QuickBooks has a setting for that, and I'll show you. But this isn't all systems that this is a problem, right? So what does it look like? What does it do? I want to take a quick gander into that, and then we're going to hop into how to clean it up. Okay, so as always, we're going to spend most of our time here in products. So the first thing I just want to point out, edit preferences. This is QuickBooks Enterprise only has this setting where it says do not allow negative quantities. Now I say this, and watch next year they're going to throw it into another product, but it's the only desktop product right now that has it. Do not allow negative quantities. So why would we put this on? Because we don't want to allow QuickBooks to go negative ever. We don't want negative inventory ever in our file, because QuickBooks does not like negative inventory at any time in history for items. Okay? So this is saying don't allow it to happen. And a lot of people do choose this setting. However, if you put this setting in place, what's going to happen when somebody needs to make an invoice or a sales receipt and they don't have the quantity on hand, or a build assembly? They don't have, well, build assembly wouldn't move forward anyway, but they don't have the quantity on hand, right? What's going to happen? They need to sell it to the customer. They're probably going to choose a different item. They're going to throw something else in there because they have to make the sale. They have to get it out the door. Or they're going to come knocking on your door, say, hey, what am I supposed to do? Or they're going to go put in a fake bill, fake item receipt, adjust inventory. So it's nice in concept to have this, or nice in theory to have this never allow negative quantities. But I mean, in practice, what we've seen is the result drives very bad behavior, basically. So what our company came up with is a process that we do with clients. We do it for clients frequently because it's annoying. The process is annoying, let's be real. Where we'll go in once a month and we just let them run your business, do your thing. And once a month we will come in and we will trick QuickBooks into thinking that inventory never went negative, even though it did. But we make it so that it never did. Okay, so that's what we're going to be looking at today. So let's talk a little bit about negative inventory. So I'm going to set up a brand new item on my items list, an inventory part. I'm going to call it in item A, super, very creative over here. So I'm not in marketing, right? So materials, whatever, all the things. Now I'm going to put in a cost in here because the cost does matter. I'm going to put it in. Well, actually, I'm going to put, for some reason, I don't know what is happening with my QuickBooks today, but it is, I hit enter, it doesn't like it. So I'm going to put in a cost and sales price and say, okay. Okay, so I set up item A. Nothing else has happened with item A. Now, I'm going to go sell item A. So I'm going to create an invoice. And I'm going to put the invoice to, test company and use item A. I don't know what is happening. It just really doesn't like me today. Doesn't like my tabs or anything. So I'm going to have to use the mouse a lot today. So I put in item A, and it says I don't have enough on hand. Tells me don't go negative, right? Gives me all the warnings. Yeah. So I put it in here, and I'm going to put it in for a quantity of 1, because that's easy to track. My gosh, I do not know why it doesn't like my tabs. Quantity of 1. Okay, so I say save. All right, invoice is in there. Now what happens behind the scenes? Because we haven't received this item in. Inventory needs a value to be able to use it. So what does it do? So let's go into our reports and our handy dandy transaction journal. And it does what we expect it to do, right? It says, okay, I'm going to hit materials revenue for $200. I'm going to take $100 out of materials inventory, even though we didn't have the $100 to put in there, right? And I'm going to put $100 towards cost of goods sold. Now, it chose this $100 because that's what I set up as the cost, the expected stated cost at the item card, right? Now, the date of this transaction is 12/15/2025. Remember, we always have to remember, how does QuickBooks organize their transactions? It is the transaction date first, and then the creator edited date on the transaction itself, right? So if I had several listed on 12/15, created another one on 12/15, it would go in order by created time of, and then transaction date is first. So now if I go in and I say, okay, well, this part, I'm going to go into my inventory and I'm going to put in a bill, vendors, and enter a bill for this item. I bought it from an accounting firm, which is weird. And I'm going to put it in for the day after for now, even though it shouldn't, I'm putting in after, the date is date after. So I'm going to put in a quantity of 10. Oh my gosh, I do not know what's happening with tab. And then I'm going to put in here a cost of $200. So it actually cost us a lot more. So we made no money on this when we only charged $200, right? $200. And then I'm going to say save. Now, if I go back to my transaction journal, nothing changed, right? Nothing changed. Because as of 12/15, when I made this sale, I have $100 was what all the system knew to put in for cost of goods sold. Now, on this bill, if I go in here and I look at my transaction journal, it has the same thing, right? It says, okay, I'm going to put into accounts payable, $2,000. I'm going to put into materials, $2,000, and then look at it puts an extra line in here, which we don't expect to see when we're working with inventory on a bill. Because when you put inventory on a bill, when you purchase inventory, it should hit accounts payable and inventory. But what it's doing here is it's putting in the difference, right? So it's saying, okay, I put in all of these items into materials inventory, $2,000 worth into materials inventory. I had a negative $100 in there already, which we'll look at the valuation detail and see what this looks like. I sold an item already, which happened yesterday, and that item, I only accounted for $100 of it, but I should have accounted for $200 of it. And so it's making the adjustment not back on the customer, not even tied to the customer. It's just making the adjustment as an internal adjustment. So it's saying, I'm going to hit materials, take $100 out, and put $100 against cost of goods sold. So let's look at this. We'll go into inventory, valuation detail for all time for item A. Okay, so the first thing it comes in, it shows negative asset value of negative $100. We received them in. The average cost of the ones we received in was $200. So it took out the one, right? It received in 10, but we had negative. So now we have 9 on hand. That's all correct. And it adjusted to make sure that the value, which is $200 times 9, is still correct at $1,800. Okay. So this is one of the reasons why, a couple things, right? What's the problem with this? Inventory is correct at this point. Great. The problem with this is that $100 does not get applied to the customer. That extra $100 in cost. So if I go in and I run a job profitability summary, right? That extra $100 of cost is not showing up here. So it looks like we were profitable on this job, and we weren't. So that's a problem. Could be a problem. If I go look at my item profitability, for item A, right? Same thing. It's a problem. It's a problem. Okay, because if we look at that transaction journal here, even though it shows that it's associated with that item, it doesn't pick it up. So anyway, things to be aware of. We don't want to let these things happen. Now, how do we fix it? So one way we can fix it is on this bill, if I go in, now if I put this bill today, I just moved it now after it's been posted to 12/15, it's still going to have the same effects because it was posted after that original transaction was posted, right? So I would have to go and move this bill to be dated 12/14. So what this is going to do when I save this is it's going to throw in the system that I received these items technically prior to me making that invoice. So when we look at our inventory valuation detail, those 10 came in at $200 each. The end result is still $1,800, but it's like everything's in the right order now. And so QuickBooks corrects itself. Okay. On the bill, when we come into the bill and we look at our transaction journal, oh, look at that. Oh, it corrected itself. Everything's okay now. On the job profitability, corrected itself. Everything's okay now. All right. Item profit, all the things. So this is one of the reasons we don't want inventory to be running negative. Okay. Second reason that we don't want inventory ever to be running negative. So let's take a look at a different item. We're not gonna do that item for now. Let's look at an item that has run negative historically. So I'm looking at my inventory valuation detail report, and the column you want to focus on is this on-hand column. And anytime the on-hand column ever is negative, we don't want it. Okay. So this is one where the invoice went negative first. We had an inventory adjustment to adjust it up some. Then we started getting bills in after the fact, like 3 years later after the fact. Something's up here. That's not good. But I mean, we see these things. We see these things all the time. So our options are we can go in and start predating the bills, right? Like you can actually course correct, put the bills so that it happened before the invoice. That's one thing. But the thing that matters the most here is what happens, right? What happens on this invoice when it goes negative first? So again, if we go into our transaction journal, we have for materials inventory, so what if we, so the item itself is $50,000. We made a lot of money on this one, so it's fine. $50,000. Materials inventory is getting hit a credit for $225. Okay, so it is being subtracted out of materials inventory, which is resulting in a negative balance on our balance sheet. And then the debit is hitting cost of goods sold on here. So if our CPA goes and looks at our balance sheet, and we have a whole bunch of negatives in there, they're going to think, oh, well, you know, that was a misstatement. And then they're going to go back that out, right? So they're going to say, oh, to correct it, I have to debit inventory and I have to credit cost of goods sold. And then we won't get the cost. And you always want to have as much cost as possible on your books come tax time, right? So that can be a problem. Okay, so this is why we don't want to allow inventory to run negative. Okay, so let me get into, I'm going to close out of all these things because I need to start fresh for how do we fix it. I have to exit out up here right now because it's not letting me use my keyboard. All right, so one of the things, if you are in QuickBooks in QuickBooks Enterprise, you have a user type called External Accountant. It is a role that you can assign to a user. External Accountant opens up what's called the Accountant's Toolbox. So if you do not see, it's not going to say Accountant up here. It's going to be under Companies, say Accountant's Toolbox. I'm in the Accountant's version right now. So the Accountant's Toolbox has some pretty cool tools. And because you're in Enterprise, you get access to them. So we have other videos on how to, like, what is all included. But one of the things that they have in here is they have Troubleshoot inventory. Now, we talked about this in another video. You come into this Troubleshoot inventory. I like to change the dates to be, you know, this is a sample file, thinks it's a future, but I like to change the dates to make it think, you know, I'm looking at all time. So I'm looking from 2001 through 2026 because people future date things. And then I'm coming down here and I'm saying, because it's going to give me an alert. You can say, give me an alert if there's negative inventory as of the to date, or give me an alert if there was negative inventory at any time in the date range. So with our customers that we do this for periodically, what we do is we go in once a month because we let their sales team do their thing. We let everybody function and purchase and everything like that. We come in after the fact and we fix it. Okay, because we don't want to slow down production for some of these little quirks. And it's usually pretty immaterial amounts, right, when we do stuff like that, when we're on top of it. Now, some clients who have never done this before, we come in and we have to fix inventory, and we can be millions off. It's pretty scary. So if we come in here and we see that at any time, right, because I could, if I had a ton of inventory parts, I could go in and run my inventory valuation detail and see if there's any negative. But this is just a quick view. Like, oh, are there any flagged? Oh, yeah, there are some flagged. That means at some point in time, these parts ran negative. So I know I have some work to do. That's what this screen does for us. So how do we fix it? So the first thing that I like to do, or that we do, is that we want to create it as a credit card account. Okay, and I can tell you why. So credit card accounts are just very easy. You can reconcile them. It's very easy to use, right? So that's why I create a credit card account. It's basically a clearing account. So I create a credit card account. I call it inventory cleanup or inventory clearing, whatever you want to call it. I say save and close. Okay, now it's not a real legit credit card account, obviously, but it's a credit card type account. It makes it easier. So that's one thing I do. The next thing that we want to do is we want to go to our inventory valuation detail report. Now, I'm in a sample file, so there's not a lot of data in here, which makes my life a lot easier. I mean, we have clients that have 20, 50,000 items, and they've been running it in QuickBooks for 10 years, and there's a lot of items. So these steps will still work the same way, right? It's just mine is going to be on a kind of smaller scale for today. So I'm running it for all time. Most of the time when we're doing this work, we're doing it for the previous month. But I'm doing a one-time cleanup right now. Okay, but normally I would say for last month, and then I would fix last month, and then next month I'll fix last month again, meaning this month. So I put it on here. I see this inventory valuation detail report. One of the things that I add to here is I want to customize my columns and add in item as a column. So that way item's on the column all the way down. It makes my life a little bit easier. Okay. And I'm going to go ahead and drop this into Excel. Now I have to do this work in Excel because it makes my life easier. I could manually, if you just have a couple items, manually scroll through and see. Like I see on here, my on-hand quantity was negative on this item at some point in time. I see that the lowest it ever was negative 500, and so that's the number I'm going for, right? But I'm going to do this in Excel so you guys can see what you would do if you had a lot more items than what I have. So the first thing I do is, because I have the item, because what I care about right here is I care about what item there is and what is the quantity on hand, not quantity. What is the quantity on hand at any point in time? So I don't care about any of the stuff on the left. I'm going to go ahead and delete it. Now, one of the things that I always do when I am working anything in Excel, especially when it comes to, because it matters, right? The order matters. So one of the things that I do all the time when it comes to anything Excel is I keep the original. Well, I copy the original usually onto a new sheet, but I'm not going to do that. And I keep the original order, because if I ever had to sort to get back to my original order, I want to be able to do that. So I run a column down the side. That way I can always sort by this column and get back to the original order of the report. So the next thing I'm going to do is I'm going to come in and I'm going to filter, and I want to see all the blanks and just get rid of them, right? It's noise in what I'm trying to do. I don't need these columns. Let's get rid of them. Okay. So next thing I want to do is I want to see which items basically are negative. So I'm going to put in a column in here that's just called negative, and I'm going to say if the on-hand quantity is less than 0, then throw in some X's, or S's, X's. If not, make it blank. So it's just a simple if-then, right, inside of QuickBooks. Anytime these items are negative, that's what it's reflecting to me. Okay. Now I can go in again and do a filter, get rid of everything because I don't care about any that are not negative. All I care about right now are the negatives. So I want to see the blanks, and it's going to narrow down for me and get rid of all these other rows. Now again, I usually when I export to Excel, I make a copy of the original sheet so I can revert back if I need to. Now I'm left with just what's negative. Okay. Now, what I'm trying to get to is not just what went negative. What I want to know is what was the most negative point for an item. So I'm going to come in here and I'm going to create a pivot table. And I want my rows to be my items. And I want my value to be my on hand. And I don't want it to be a sum of on hand. I want to change the value field settings and make it the minimum. What was the lowest point? The other value that I want to throw in here is the average cost of these items. And I don't want a sum. I want the average. Okay. So this is what I end up with. Okay, so if I look at AN12, whatever, right? If I come back to my sheet and I look at all the AN12s, it's saying the lowest point, right, is 500. And the average cost, the average of all the average costs that show on this sheet is 45 cents. So now I know what my adjustment needs to be. Okay. Now the reason that this needs to be, so what I'm fixing is I'm going to go in there and I'm going to say, okay, I want to make QuickBooks think that it never went negative. So the way to do that is to make an adjustment prior to the time when it went negative. So if I were doing this just for the month, right, month of January, I'm fixing the month of January, I would date my adjustment on the last day of the previous month. My first adjustment on the last day of the previous month, because I'm saying as of 12/31, I had these at least, or I would date it on the first day of the month. Sometimes it depends on how we do it with customers. As of January 1st, I had at least these parts in here because I sold them during the month, so I know that they were here. So I am putting an adjustment into the beginning of the month that says these parts were on hand. So let's talk about how we do this. Inside of QuickBooks, in the accountant's copy area, you have this batch enter transactions. It's a great little feature. You come into batch enter. I can choose my credit card credits. I can customize my columns. I don't have a payee, so I'm going to remove that. You have to leave account. I'm not going to have an amount, but you have to leave that one too. I can put in a memo if I want to, but you don't have to. I have my item, my quantity, and my cost. That's really what I care about, and my date. Okay. So in this case, the oldest transaction in here, right, was in 2022. So I'm just going to date it for 2020 for now, just trying to get through. But I could have dated it like 10/31/2022, let's just say, because then it would be happening before these transactions. So I come in here, I date the first line, 10/31/2022. I'm going to copy my items from my pivot table here into QuickBooks. Now notice it fills in the date the same. I don't want to copy in the negative amount, right? I want it to be positive, but actually a little trick in here is I'm going to copy the negative amount in to the quantity fields. Okay. And then I'm going to copy in the average cost because I want the average cost. So what's going to happen here, right? If I'm going to go in, I'm going to put these 500 items at 0.45 average cost. And so if the average cost at the end of the month is different than the average cost that I'm putting in now, it will mess with your average cost a little bit throughout the month, but it will be correcting them. So I come in there, I copy the average costs, and I paste these in as well. Now notice when I paste them, it changes these quantities to positive, and that's what I want to have happen. Because I put in more negative, I'm just going deeper in a hole, right? So now I put it to inventory clearing as of 10/31/2022, and I say save these transactions. So 7 transactions are saved. Now, when I come back and I refresh, never was inventory negative. I fooled QuickBooks. That inventory's never been negative at any point in time because of that transaction I just put in. Now, the next thing that I have to do is, and I'm just going to show you guys this because we're running up on time. In the preferences, when you're dealing anything like this, report preferences, there's a report preference that says, I want to show items by or accounts by name and description, or description only. So when you're doing things like this, you want to show it by name only because otherwise I can't cross-reference. I don't want the description because it throws the description and the name in the same cell in Excel, and I don't want that. So the last step in here is I want to go into my inventory valuation summary report. Same thing for all time, because I'm doing this fix for all time. And there's timing things on all this, so if you guys need help, this is what our consulting team does. But I want to throw this into Excel. And again, notice how it doesn't say name and description in here, which is important. So I'm going to throw this number into Excel. Okay. Now, the other thing about this is there is like a whole thing, you know, I have to copy these ones over to here so they're in the same column. And anyway, there's this whole thing with dealing with sub accounts, and we have a lot of videos on that, but I don't have time to go through that today, how to get it to match up. So what I want to do in here is now I want to know what is our ending quantity on hand, right? And actually I did this backwards. Great. Well, I should have done this part before importing those transactions or pasting those transactions in, because I needed to know what was my ending quantity on hand prior to fixing inventory, right? So where was I at? But I can back into it at this point. So ending quantity on hand, I'm going to do a VLOOKUP. I'm going to say, okay, I want to look up this row, compare it to this row, and I want it to spit back column 3 and 0. So it returns for me my ending quantity on hand. Okay. Now this one, because it has the pool covers colon POCO, that's why it's having an issue. So let me just look up that one for now, since we got to get off. So there's 14. Okay. Now, all these ones that are 0, what this means is that they had a negative quantity on hand as of today's date. So I'm not going to go in and fix those, because what this is saying is that we sold these to the negative and we never built them ever. So I don't want to go throw in more negative quantities by adjusting those back down to negative. So I'm just going to leave those ones alone. Now these guys here, right? Plus this, plus this, plus this, plus this. These are the quantity on hands they would have shown prior to me making that adjustment. So I need to go fix for those so they get back to the correct quantity on hand. So again, I come into my inventory, my batch enter transactions. This time I'm going to date it as of today, or maybe I'm going to date it as of next month, end of next month, because that's what's happening. And I save this transaction, or I'm sorry, I save this transaction. I come in here, I copy in these items. Sorry, I'm running up against time, so I'm getting more nervous here. I don't need to copy in this value because they already have. I need to reverse this quantity. So I'm going to put in, back in, right? Take away 500. And I actually have to do this backwards because I have to put the average in first. So put the average in. And notice it turned it to positive, but I need to take them back to negative. So let me put this in here and say save transaction. So what that does is on my inventory valuation summary report, it takes that AN 12 back to 535 on hand, which is where we were at. So I went, before we ever went negative, I brought it up to positive, so it never went negative for all time. And as of today, I brought me back to our quantity on hand of where we're at. Okay. All right. And then just really quickly, the last step in this process is I come into my inventory bank account, credit card account in here. So I have a $41,000 difference because of these negative transactions. That is the net of these transactions. Now, usually when we're cleaning up once a month, we will go in there and we'll adjust this against some kind of materials cost of goods sold. Now, that's a significant amount, but this is cleaning up for all time, so that kind of makes a little bit more sense. But we'll adjust it against, so I need to make it a payment against cost of goods sold. And then it'll bring this to 0. And then the last step, I guess I should say, last step really is to reconcile this credit card. Once we're done, always reconcile it to 0, mark all transactions off so that then next month I have a clean slate for what isn't reconciled being thrown in there. Okay. So again, we tricked QuickBooks into thinking that it never went negative. That was our goal. We have a couple courses coming up, so keep your eye out for what is happening in the future. I hope you guys were able to learn something today. Sorry I took you over time. And if there were any questions, I'll get back to you after this. All right, guys, have a great day.